I'm joined by these wonderful people here, and I'm going to let my panelists introduce themselves. Let's start with you, Caitlin.
Hello, everyone. Good afternoon. Hopefully, we're getting you to drinks on time. My name is Caitlin Azra. I'm Executive Deputy Superintendent for Research and Innovation for the New York Department of Financial Services. So under that remit, I have an economic research unit. I have an innovation policy unit that also includes outreach, and then virtual currency licensing and supervision for New York State.
Then we can, Jason.
Hi, everyone. I'm Jason Algrante. I'm the Chief Legal and Compliance Officer at Fireblocks. Fireblocks, we're building infrastructure for a digital asset-enabled future. We are an institutional-facing software as a service provider. Our customers range from financial institutions like BNY Mellon that want to introduce white-labeled digital asset custody products to FinTechs, to hedge funds and asset managers. I should preface all my remarks today by saying that I view regulatory change through the lens of what's happening in the digital asset space, and so my remarks will be pretty focused on that today.
I'm Chris Owers. I'm the Global Head of Reg Solutions at First Derivative. First Derivative are a capital markets consultancy, originally based out of Northern Ireland, but now global organization.
Great, thank you. So I think it is safe to say that there is an onslaught of regulatory change happening at the moment. In fact, the number of regulatory proposals coming from the SEC alone has been tremendous. SIFMA, Asset Management Group only, submitted 44 comment letters so far this year, and that's just the tip of the iceberg because we have limited resources and only respond to those proposals that are really critical for our members. So, and adding to that, we have adding to the federal regulatory agencies, we have state regulators who are also increasingly looking at the securities industry. And then, of course, we have international regulations. Particularly interesting will be the UK regulatory regime and how they are changing EU regulations back to more UK flavor. So with that, Chris, let's start with you. How is RegTech assisting in managing regulatory change, as well as providing an effective policy management and strategic approach to regulatory change management?
So when I was thinking about this, I was quite positive and optimistic, and then you listed out all the changes, and I was like, oh, well, I'm not sure my answer still works. But if you think about some of the technologies available, so from the concept of know your risk, the technology notifying you on upcoming regulations is increasingly more sophisticated. The ability to see how regulations impact your business through concepts like regulatory lineage are more usable than they were sort of 5 years ago, even a couple of years. You take with that then data management, the ability to understand your business through data analytics and telling story with data, and you can make more effective decisions. So I am positive and optimistic about some of the technologies and how they can help with change. There's still work to do. Some of the technologies work very well in isolation, and the next stage is kind of connecting them either through the business, top to bottom, or the ability of business to go out and take the best in class of each of the components. We also need, as an industry, to get more connected and tied up. So today, for example, there is another conference about data management running concurrently, which is great, apart from the fact that some of the topics here would have been relevant for that audience, and for the audience here, some of the topics discussed there would have been relevant as well.
Sure, yeah. Caitlin, a little bit different spin on the question for you. What are regulators' expectations of using RegTech for managing compliance risk, and how do you use RegTech as a regulator?
Yeah, so I think obviously I'm in an innovation space, and I have been for a long time. So generally, I have a positive view on the opportunities of technology generally to change financial services and the regulatory space. But I would say, we expect entities that we regulate that are generally kind of focused in financial services to treat RegTech like any technical implementation. Just because you're using it doesn't mean you're automatically in compliance. It's a tool like any other, and so I think what we're focused on is the implementation of that tool. Do you have policies and procedures? How are you wrapping risk management around that additional kind of component of your overall program? So I think, again, that adds, of course, complexity to just, procuring a new technical system. But I don't think that's a reason to, not do it, not explore it. It's just about implementing it well, which is what we expect across all of the activities of regulated entities. In terms of, how we're using it, so obviously kind of the RegTech, SupTech space are somewhat blended. I think because I'm responsible for virtual currency and I support our banking and insurance divisions, we're absolutely exploring the tools ourselves. So you're not alone in kind of the journey. And thinking about what is that appropriate implementation. I think specifically in the virtual currency space, we're using a lot of the transaction kind of monitoring tools and market overview systems, and we'll learn right along with you.
Great. Jason, you have anything to add or move to the next?
I think it's a very interesting question, and I think the panelists have done a great job. Yeah.
So not only is there a lot of regulation being proposed at the moment, but the regulatory landscape is also getting more complex. As mentioned, there are different states that have different rules, and UK is expected to propose changes to differentiate from the EU rules. So that speaks to why RegTech solutions are really needed in the industry to keep up with regulatory change and help firms with compliance. Luckily, there are many vendors who are filling industry needs in the RegTech space. Caitlin, how can regulators enable RegTech collaboration, more collaboration in the future?
Yeah, so I think, again, biased from my position and prior to working at DFS, I was in the Federal Reserve in a similar kind of innovation advisory capacity. And a lot of what I tried to do is kind of introduce supervisors, examiners, and regulators to innovators, whether they're RegTech innovators or kind of innovators generally, direct to consumer or to B2B in the space. And so I think part of that is collaboration and kind of introducing that community into the regulatory system. So as I mentioned in kind of our policy unit, we have an outreach function. So we've kind of relaunched what we call DFS Exchange. It's an open portal to kind of be transparent, to have a conduit for really any innovators. But of course, if you're in the RegTech space and interested in talking to us, encourage you to go to the innovation section of our website, fill out an interest form, and then basically we'll have an intake process and connect you to the right people that are exploring that in DFS. And so I think a lot of regulators are doing that now.
Chris or Jason, do you have anything to ask on add to the collaboration?
Yeah, no, at the risk of entering boring panel territory within the first 10 minutes, I couldn't agree with Caitlin more. For us, this is a two-way street, and I think the onus right now is on industry, and less so on the regulators. But let me perhaps give you an example of how I see this working. So we have a very good relationship with the MAS in Singapore. They're currently running a sandbox project called Project Guardian, I believe. Basically, the concept of the sandbox is to create a safe space, right, for financial institutions to test reg technology. But I think the idea of doing it really came out of conversations with the industry, where the technology inexorably led to certain conclusions, right? We will have on-chain identity. We will be able to solve the KYC AML problem for quote-unquote unhosted wallets, right? But in order to do that, we need to bring in what Singapore is referring to as anchoring financial institutions. And so I raise this because I think this is something New York DFS is doing a tremendous job at. I think the MAS is doing a tremendous job at it. But the industry came to the regulator. They said, this is where we see things going. This is how we'd like to work with you to pilot something, right? And so I think it's on us as industry to bring the innovation to the regulator. There are many and multiple opportunities to do this. In the United States, for example, FinCEN, anti-terrorist financing, anti-criminal, and money laundering, right? We should be using blockchain to further these public policy goals, and we shouldn't be losing the narrative, to some concept that this is a good technology for criminal financing. So I see a lot of opportunity here. It has to be led by industry.
Yeah, and the only thing I would add is, how granular or how far down the collaboration. The more real, real life examples where we're discussing solutions, and then firms go away and implement them, the better the outcome's going to be.
Yeah, I'll just add one thing to Jason's comments. I mean, that kind of experimentation by regulators in partnership with industry is really exciting. I think DFS hosted a tech sprint before my tenure, but it was quite successful in the virtual currency space. That kind of work is quite hard, even internally at a regulator, to kind of convince everybody to get on board and do that. And so definitely having the industry come and express interest and be open with us allows us to kind of bring the support in that we need to do that kind of collaboration.
And even to further develop my point on that, it's not just the sandboxing, it's not just the creating these things, because I think that is exceptional. But when I say the onus is on industry, we need the regulators have taken steps, and Caitlin is here as proof of that, right? To create innovation offices, to create points of contact where they can, take this information from industry. But we have to go down and we have to educate them and we have to sit with them, because, again, at least in the digital asset context, I think there is still a lot of folks within these agencies who don't quite get it, and they don't quite get the applications, and they don't quite get what their own supervised entities are doing with it.
Yeah.
So it's our job to raise our hands, and we do a lot of this at Fireblocks. We're a software company. We're not regulated, and yet I am constantly going into meetings with regulators around the world, describing what we're seeing in the industry. As I started out saying, we serve financial institutions all the way down to prop trading firms, right? So we take a broad infrastructure view, and we volunteer to be a resource to regulators, both because we serve their supervised entities and because we think it's good for the ecosystem.
Great. So let's turn to ESG. I don't think we can have a panel these days without talking about ESG. This is an area that will have a tremendous amount of data, and it will require the help of RegTech. The US regulators are just now starting to propose rules. How is ESG influencing future regulation frameworks? Chris, let's start with you.
Yeah, so it's going to have a tremendous impact on it. Your point around we can't have a panel without talking about it is kind of evidence of that. For those that weren't here earlier on, one of the words used is forensic, in terms of how on top of your data and understanding everything that's happening in your organization, everything that's going out the door, every statement that's made. Within the organizations we're involved in, we're advocating very much a granular framework. Goes back to the point around collaboration, so it's not just firm-driven or bank-driven. It's regulator all the way through. One of the real challenges as well with ESG is how vast the scope is. We can debate whether that's ESG and it's kind of growing arms and legs, it's becoming extremely wide, or it's true ESG. But you're going to have sophisticated organizations, and then you're going to have small firms. You're going to have a regulation that needs to be sort of machine readable, right the way down to small organizations that are going to need kind of to be able to respond on a people basis.
Anything to add?
I would say, specifically on the environment side, this is outside of my remit, but just to mention what DFS is involved in. So the superintendent has stood up kind of the first of its kind climate division in New York. And so I have colleagues in that division, and they're kind of actively looking at, how do we measure and consider the risks to banks on the environmental side and, related to all of our entities. And I think they are working on guidance and put out guidance with regard to environmental considerations for insurance and now banking. So definitely active, and again, our role in providing as many kind of touch points and transparent guidance as we can.
Absolutely, great. So let's move on and talk a little bit about digital assets. We have Biden's executive order on ensuring responsible development of digital assets, and we have the federal digital assets framework that was just published last week. We also have recent remarks by SEC Chair Gensler talking about how securities laws are applicable regardless of the technology. So that includes cryptocurrency, and that the vast majority of crypto tokens are securities. So far, the SEC has deemed 9 cryptocurrencies as securities, but Gensler has also said that he has asked the SEC staff to work directly with entrepreneurs to get their tokens registered or regulated where appropriate as securities. So given all this, is there a need to develop further frameworks to regulate digital assets? Caitlin, let's start with you.
Yeah, I appreciate the question. So I think you'll hear this answer from DFS pretty consistently. So we have a framework to regulate what we consider virtual currency as our definition. And I think that is a very kind of robust framework that we really encourage federal counterparts and other states to model. It's been around since 2015, so we're going on almost a decade of kind of robust regulation and supervision of the virtual currency space. I would say, a few key components. We're touching this space through a number of different frameworks. So we have our BitLicense program. That allows for entities to engage in virtual currency business activity. This is distinct from other states which typically license entities through the money transmission framework. And that money transmission program we felt was just not sufficiently kind of robust and rigorous and comprehensive for the virtual currency space, given how dynamic it is and how many different business models are there. So this BitLicense, I think, really gives us the ability, I would say, to look horizontally across the market and not define things as a security or a commodity, but really say, how do we do this in a prudential way, similar to kind of bank oversight. We do everything from operational risks, cyber risk reviews, BSA, AML, consumer compliance, and everything that flows from that. In addition to that, we have a limited purpose trust charter framework. This is kind of a different tool depending on what entities kind of want. This gives fiduciary authorities to our entities in the trust charter. It is considered a bank, a depository institution, though we kind of limit some of the activities there from a risk perspective. And it also allows companies to kind of touch fiat. So we think these two different frameworks kind of give a lot of flexibility to the industry, and we've developed a really great program on it. I think the additional thing for DFS is at the state level, we're able to move quickly. I think that's been traditionally the benefits of the dual banking system, and I think that's evidenced by the guidance we put out in stablecoin and blockchain analytics, and what we'll continue to do on everything from kind of capitalization to consumer disclosures. So we will try to continue to be, transparent and forthcoming with the industry on what we expect under that framework. Sorry that this is a lot, but obviously it's an area that we're passionate about at DFS. So the other thing I will add is, specifically related to Biden's executive order and, all the efforts at the federal level, we absolutely, support federal action in this. Obviously, we are only responsible for the territory of New York State, though we think that given the central location of New York in our financial services ecosystem, our kind of work has trickled through to the rest of the U.S. So we've been supportive of federal frameworks and actions by kind of our market regulator colleagues. Our kind of key goal, though, is that this shouldn't preempt the opportunities at states if entities want to get chartered or licensed in that manner. And then, again, our ability to not have to look at a specific narrow security framework or commodity framework or consumer protection framework, but kind of look across the board.
Jason, let's move to you.
That's great, Caitlin. I mean, to answer the question very directly, there is need for regulatory change. And I'll put more directly what Caitlin won't. I think that executive order is a bit of a red herring in that respect. Let me maybe lay out some table stakes first, and then I'll go into where I do see real sources of change coming from. So we recently, just last week, held our first user conference in Barcelona for our customers to come and meet with the exec team and everyone at Fireblocks. And as part of that, we held a financial institution roundtable where we invited our large banking customers to come sit down together and discuss, shared issues and obstacles. We had about 25 global large banking institutions participate. 2 of them were from the US. The United States is falling behind in digital asset regulation, and there are implications for this that touch on US dollar hegemony as the world reserve currency. There are implications for our ability to retain control of payments rails. And there are implications for being leaders in innovation, law, regulation, et cetera, on down the line. So we do need regulatory change. I see 3 principal sources of that. Number 1 is the states, and I think Caitlin's done a great job of explaining New York DFS's role, but to underscore that, the states are our incubators. They always have been. That's the constitutional intention. And the kind of innovation we're seeing unleashed by DFS is going to roll up into federal efforts and other efforts around the country to create that change. The second is the regulators themselves, and I think I've kind of discussed already a little bit about how I see that working, which is a collaborative partnership where the industry has to come and share ideas with the regulators, right? I think we're seeing the limits of that with what you quoted from Chairperson Gensler, right? The impulse to bring these assets within a regulatory framework is the good one and the right one. However, the chairperson is up against the limits of his own authority to, by decree, do that, right? He's going to have to do it by enforcement action, or even better, and this is the third source of change, is congressional action. So I think we've just taken, for the second time, our CEO down to DC. We have on our advisory board Jay Clayton, who joins us for these meetings, and we go and we sit with congresspersons, we sit with senators, and we talk about the issues. And I do see change on the horizon, and I hope it's beneficial. But for me, the executive order is great because we want the president to shine a spotlight on these issues. But unfortunately, he's limited. The executive branch is limited in what it can do on its own. They do have authority over OFAC and FinCEN, and we have seen rulemakings come out of there. But ultimately, I think we need to see these other sources of regulatory change.
Can I ask a small question on
Yeah,
that? In
please.
terms of, do you see that as positive change, or do you see that as more restrictive?
So I'm focused right now on when we go down to DC, for example, right? We basically say 2 things. We're here as a resource to you, and if you want to, we know you can't get a home run, but if you want some base hit singles, right? Stablecoins, stablecoin regulation, even something as simple as saying, this is what a stablecoin is, this is who can issue it, under what terms and conditions, and it's not a security. Doing that, we feel, would unleash private investment in the space. It would unleash our financial institutions and encourage them to come on board. I want, at the end of the day, a vibrant digital asset ecosystem. So institutional adoption, particularly from the traditional financial sector, is huge. So something as simple as stablecoin regulation that's clear and sensible, right? I think it would be hugely beneficial. I think also what's being considered under the DCCPA or Stabenow-Boozman could also potentially be the foundation for something bigger that in the near and medium term is very beneficial.
Do you have anything to add, Chris?
I think more only that I think having been in transaction reporting for a lot of my career, would welcome the change, because I've sat and tried to force digital assets into the current framework. So I think I and our clients would welcome that.
Great. So let's switch gears just a little bit here and talk about firms' risk programs a little bit. So even though RegTech is super helpful, it's not enough just to have technology, is it? Firms' risk programs also need to keep up with regulatory change. Chris and then Caitlin, although technological advancements have increased organizations' capacity to detect and recover from risk disruptions, how can organizations ensure operational resilience?
I think it comes down to your culture within your organization and then your proactivity around the topic. So the fact we're talking about it is positive, right? It's recognized as a challenge for organizations. I think quite often, certainly in large organizations, they've become very complex to work through. That is a challenge. I do think technology is an enabler, and I would say look past it, and then beyond that, sort of your culture within the organization and setting the bar high from the top is important.
Yeah, I'll add that I think, I've worked a lot in kind of the business continuity planning space. Obviously, there's a lot of good kind of programs and resources out there, even with the federal kind of regulatory frameworks on that side. I think something that Chris mentioned before in terms of the other conference, data management. So I've seen a lot of instances of just kind of, that interconnectivity between the firm where kind of your third-party risk program isn't talking to your business continuity program, and it's kind of derating risky things, and then you're not prepared in the event of, something going down. And so really your internal systems are kind of your foundational platform that you need for the resilience. So I think just continuing to do that work is essential. And then, not to be a broken record, but as Elisa alluded to, right? It's not just technology; it's all the wraparounds to it. Your risk management, your policies and procedures, kind of your board meetings. Your people that are actually going to do the work and make sure that you have the checks in place.
Absolutely. Okay, our last prepared topic is a look to the future. Although regulators may sometimes seem a little opaque, there might be some inclinations in that we could predict changes to the regulatory parameter. So, to all of you, what do you think is going to be the biggest regulatory change in the next year? Caitlin, let's start with you.
I'll start. Well, I would say this will be general, but I've been now going on 10 plus years in actually the regulatory innovation space, and I've seen so much change, right? So many of these offices stood up, so much kind of effort into doing this long term. So I hope we are now at kind of that tipping point in which regulators have the places to kind of ingest information about technology, process and think about it in a more kind of quick and responsive way. And I hope that then takes us into kind of whatever the next wave is of innovation that happens in financial services, that we now have those offices stood up, we have that collaboration, and we're ready to kind of evolve with all of you.
Yeah, I think as I said earlier, I'm hopeful that we'll see legislative change, and I think legislative change is what's going to really move the needle around where the regulatory agencies are right now and help create clarity, which will then, give them more space, honestly, to supervise, examine, create rules that make sense, right, once they have a clear direction. So I do see or hope that a good deal of regulatory change is coming, and I think we're going to see the pace of all this quicken. And I think where we're headed is in a really interesting direction. I do, again, really see RegTech and technology solution providers playing a major role in this. I mean, when I forecast out to what, say, like a Web3 world looks like, right, it's one where the currency of that environment are stable coins, where the ability to enter and exit these internet environments and transact is done through identity tokens on chain. And there are just major implications for the collection, storage, management, encryption of that personal information. And so I think, RegTech is really leading the way here, and we're looking to, in a way, the technology solution providers to tell us how we're going to get to this place where it seems obvious to me, at least, that we're going. So I think it's going to be very interesting to watch for the next year.
So a little bit sort of tongue-in-cheek, but I hope that the ESG regulation doesn't get so large that we end up having to chop down far too many trees to print it out, because that would be a sort of sad irony. But I hope that we are talking about the progression in RegTech rather than having to talk more about supervisory tech, kind of superseding that. And that means as an industry we're being proactive, we're getting ahead of the challenges rather than being reactive and responding to enforcement, which is time-consuming and generally not good for the industry anyway.
We do have a couple of questions from the audience. first one is, are large financial institutions able to collate all the necessary sustainability data? On top of that, are they able to get insights from this data, or is it just sitting there?
Yeah, I guess I'll take a pass, but of course, if my co-panelists have any insights, welcome them. I think the data collection in kind of environmental issues is obviously a moving target. What we're even going to look at and measure and how to build these models, I think is still in development. So I would say, no, but not necessarily because, it's not available. It's, we don't know the right measurements yet to inform this space. And I think the regulators are working on that with the financial institutions and anyone else in the space. And then eventually we'll have to get to the place where, we know what data are there and how we're going to collect it. And we can get to a place like we are with a lot of, kind of our lending data and our, anti-money laundering data and transaction data, that it's kind of known and processed, at least the model side.
Yeah, I think, get to a place, I believe we can get there as the regulation comes through, done in the right way with the right level of collaboration. I believe that we can get to a stage where the data is provided and useful and usable, I think was the second part.
Great. I mean, from a trade association perspective, sometimes it can be difficult to get the data, especially because there are so many new alternative investments where the data is very unstructured and could be kind of difficult to get. So that could pose a challenge to many firms, especially because alternatives are becoming such a larger part of investments. But just all in all, I think, at least our members, which are the biggest asset managers, they're really getting a lot more sophisticated when it comes to data. So I think they're really a good way there. Second question from the audience. Many consumers are interested in cryptos, but does regulation have the potential to stall the development or adoption of crypto and potentially keep it at Wild West?
Yeah, so I'll start, and Jason, if you have anything to say. I mean, obviously, we can have the positive side of regulation, or we can have kind of the boogeyman side in which it would stall the advancement. It wouldn't let consumers have this investment opportunity. I think it's our view at DFS that rigorous regulation is actually a partner to innovation, and it enables that work to be done in a safe and sound manner, and then consumers are confident in their ability to use the product. And so I think rather than stifle it, I think it's providing hopefully a service and a platform in which consumers can use it more and more in a way that they know is safe. So I think that's just kind of how I see the industry evolving.
Caitlin, I hope you don't mind. I have an anecdote. So Caitlin and I were in an industry forum where we were able to share feedback with New York DFS, and one of the points of feedback was that, hey, isn't New York DFS too restrictive, right? Shouldn't we be able to invest in this or that, right? And of course, one of the things that New York DFS wouldn't let us as residents of New York State invest in was Celsius, right? And so that comment was made before, right? And then here we are after. So, I think Caitlin's absolutely right that, in fact, legislation or regulation, right, creates the environment for consumers to have confidence in the things that they are investing in, right? And I keep bringing it back to stablecoin because I think it's such a crucible for seeing these issues, right? But we recently had the collapse of Terra Luna, an algorithmic stablecoin. What's clear is that there is a use case for stablecoins, right, and that consumers want to use them and they want to transact with them. What's needed are stablecoins that are safe, that are fully backed by the US dollar, right? And so that's where regulation comes in and plays a part. And I always talk about stablecoin as a bipartisan issue because I think there are actually a lot of issues in the digital asset space that are bipartisan. On the one hand, regulation will enhance consumer protection. On the other hand, it will unleash private investment. So, I mean, I think regulation actually does, in fact, enhance customer protection and institutional adoption.
It's a good segue to our next question. is there a room for both CBDCs and cryptos, or will CBDCs become the main type of digital currency?
I could take it first. I mean, I think what we'll see, right, is every country take a different path with respect to CBDC, depending on, you know, their own situation and history. For me, I think we should study it in the United States. I think the Federal Reserve has never, I don't know how to put this, issued a retail-facing product, right? The Federal Reserve is really good at controlling bank reserves. It's really good at operating the pipes. And so it might be the case that in this country, what's best for us is basically a de facto private-public partnership. So if, for example, we had legislation that said stablecoins could be issued by our banking institutions that would keep dollars within the reserve system, that would enable the Federal Reserve to exert control and also supervisory control, right? And you would have a de facto kind of digital US dollar, it'd be completely backed by the USD. So I see that as a path we're going to take sooner. And whether we come to CBDC in the DC in the United States or not, I'm not sure. But I think we will see other countries go down that path if it makes sense for them.
Yeah, I'd just add, you know, I think as Jason alluded to, I think CBDC doesn't have to always be retail facing necessarily. I think there are explorations on kind of a more wholesale approach that might be more fit for the United States. I think, you know, it's blissfully the one piece of digital currency that might be outside of my remit. In that, right, we at the state level aren't planning, nor would we necessarily have a CBDC that we would do. And if it were to be issued by, you know, a federal entity, it wouldn't be within our remit to regulate necessarily, though obviously if entities are engaged, we would be there with them. I do think, you know, what we've communicated in the general CBDC discussion is our support for our stablecoin issuers, and that anything needs to allow for the continued private provision of stablecoins because they are serving a purpose, and we have obviously with our guidance and our oversight made sure that they are stable in the one-to-one USD backing. So we do think that if that is developed, it should exist side by side with a private option.
One last question from the audience. Are there any areas of compliance you think are currently getting less focused than it needs?
Listening to the questions, I think, you know, the answer is probably yes, but partly because we've spoken about ESG and digital currency pretty much throughout. So I think the simple answer to that would be yes. I would imagine that as you know, you've obviously had rate changes this week and different things, the focus will move back. Whether you'll see, I don't know, organizational behavior issues come through, or, you know, we spoke at the very beginning today about messaging, scanning. That I'm not convinced that's come through all the pipes. And as that gets down to the bottom, I imagine the focus will move back across to that.
Yeah, I'll add, I mean, so when I'm not a regulator, I do research, and one of my areas that I've always been passionate about is kind of data and data management. And so I do think what I've seen is, you know, data management and kind of quality and completeness considerations and how that's really processed inside of increasingly complex and kind of layered technical systems is typically doesn't fit naturally into the regulatory kind of sections that we look at. You know, I think it shouldn't be relegated to, right, an IT kind of issue, right? It cuts across an entity, it cuts across business units, leadership, and so I think I've seen regulators struggle to efficiently supervise that. So I do think that's an area where I would like to see more focus, speaking for myself.
Okay, that brings us to the close of the panel. I think that's all the time that we have today. I can say that from my perspective, it was really great to hear your insights on RegTech and the future of the regulatory landscape, especially when it comes to the digital assets. Super interesting. Huge thank you to panelists, Caitlin, Jason, and Chris. Thank you so much.